Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is the daily video research from the ForexPeaceArmy.com that dedicated to the euro currency. As usual, we'll start discussion of this pair from the daily time frame. Well, on the daily time frame is not much to comment, since market stands in some tight range inside of that trading bar, and we obviously see that this is just a consolidation, some kind of retracement after the solid move to the downside and the hitting of that target, that is the 100% extension from that A, B, C top. Market hit 618, retraced 100%, now turns to some retracement. From the classical point of view, this looks like flag or pennant retracement pattern, and the target, if market will break it to the downside, will be equal to the mast of this flag. So we should count this distance to the downside, and it will be definitely below this low. That is, in general, agrees with our medium-term forecast that market could and should break this low and reach it at least 128.50 area. But currently, it's a bit tricky situation in the short-term perspective. Although we see that market almost has hit weekly period resistance 1 that we have discussed in the previous trading sessions. We said when the market retraces during the bear trend, it usually retraced to the weekly period resistance 1. That is also the confluence resistance area, 134.60, 134.58. It's around weekly period resistance. This is normal. The Fib resistances market hardly penetrated. Okay. At the same time, you can see that market hasn't closed above the weekly pivot point. So we see the penetration during the first day of the week, close below it. Then again, yesterday, close below it. Now market is trying to move to the upside again. Currently daily trend is bearish. So it's very difficult to estimate will market will continue move and still touch the weekly period resistance 1, or retracement will be over and market just continue move to the downside. So should we enter short currently, or it's better to wait for some continuation to the upside? There are some signs either for first scenario, and as for first scenario as for a second scenario. So let's shift to the 4-hour time frame. On the 4-hour time frame, we see the trend is bullish currently. Even more, we see that gap stands unfilled for the third day in a row. That is the bullish sign. Also, if we will build the Fibonacci retracement area from that swing to the upside, from that low to that high, you will see that market holds well above the 618 support of that swing to the upside. That is also the bullish sign. Take a look at the MACD histogram that shows the momentum of the upward move. So you can see, if you will see these lows, you see that that low has significantly lower, smaller momentum, since you can see some kind of divergence, and this tells us that market becomes weak on the downside. But we do not see this to the upside. We can see that this top market shows this momentum. On the second top, momentum becomes even greater. So that is confirmed that market in the short-term perspective had the solid momentum to the upside. Also, there are some patterns that could appear on the 4-hour time frame. If you'll take a look at that tops, you'll see that this top is 127 extension from that retracement, from that high to that low. 127 extensions right here, 134.32. If you will take a look at the hourly time frame, you clearly will see the butterfly sell pattern that has been formed in this area. Now, the 1618 extension of that move, of that swing, stands precisely at the same area of the resistance. It's 134.722. I just want to remind you that this is daily confluence resistance, weekly period resistance 134.60, and the 100% extension target of that pattern, A, B, C bottom, D, A, B, C, D pattern. Okay, that's really strong area of resistance. Now, let's take a look at the another swing down from that high to that low. 127 extension stands right here, 134.84. So you can see that 134.60, 134.80 is very tight and strong area of resistance, and that is somebody of you has marked on the our forum said that this probably could be the 3-drive sell pattern. That's all very probable. If you will draw this line not by that tops, by that tops, you could get the bearish wedge pattern. That is very common, agrees with the 3-drive sell pattern. So anyway, there are some signs still exist that point on the possible continuation to the upside of the market. Also, the 4-hour time frame is bullish currently, so trend is bullish on the 4-hour time frame. That is also important. What we'll see on the hourly time frame? On the hourly time frame, in fact, I do not see any significant pattern that could point either on the continuation to the upside or on the breakout to the downside. Just want to remind you, this pattern that we discussed yesterday, A, B, C bottom, market accelerates directly to the 100% extension, shows 618 retracement, and not quite reached the 1618 target on 134.56. So that area, that target, also stands in the same area of resistance. So that's why that area is our preferable area to watch for the sell signals. Well, at least if market will break it after a bit later, you will have enough time to place your stop to break even, since market during the first touch has a solid probability that it will respect it somehow. Will touch it and then returns to the downside. Well, hourly trend now is a bit tricky, but still on the bullish side. Okay. Here we see some inner triangle pattern. But still, I do not see any significant patterns that could point on the further continuation or a possible breakout. Well, that is our butterfly sell. Very often the 3-drive pattern consists of 2 different patterns. This could be 2 different butterflies. This could be another butterfly, as we have discussed on the 4-hour time frame. So, what we could do currently? Well, I think that since intraday charts point and shows the bull trend, we have no possibility to enter, we have no context for enter on the short side of the market, because this tells us that probably market can continue move to the upside. As with other patterns, they are market hasn't quite reached the targets that stands around the daily confidence resistance. Also, it could form the 3-drive pattern that points on the area around 134.60, 134.80. Until that situation still exists and market could continue move to the upside, I think that it's not the time to enter on the short side of the market right now. Probably, if market will break this line to the downside, well, and fill the gap, only after that probably we could try to think about the potential entry on the short side of the market, because hourly trend will turn bearish, daily trend now is bearish, and 4-hour time frame will turn bearish. Well, after that, this will be the probably some hope that market will really market is really continue move to the downside. At least we do not lose anything if we just wait a bit, because if market will show some first thrust to the downside of the breakout of our expectation of potential 3-drive pattern and continuation to the upside, we have a lot of time to wait for some nearest retracement on the hourly time frame, for instance from that gap pattern, okay, and enter on the short side of the market, possess ourselves relatively safe for the continuation to the downside. If you will try to enter short currently, well, in that case you should assume and save your position from the potential move right to the 134.80 area. So your stop should be placed somewhere above it. So this is not small distance. Well, I think that it's better to wait for some plunge to the downside and then enter on shallow retracement and place a relatively tight stop, rather than trying to short market right now and place a very far stop. Okay. Besides, if our assumption and suggestion about the continuation move to the upside will realize, market will hit that area, well, in this case, this will be much more suitable situation for enter on the short side of the market, because it will allow you to place a very tight stop. Okay, and your risk-reward ratio, and if even the market will respect a bit this area, will be solid. So, that's been said, my personal view is that it's better to wait some clear signs from the market. This could be either continuation move to the upside and enter short from that area, or to wait for some solid plunge to the downside and then using an intraday chart, for instance 30-minute chart or hourly chart, to wait for the nearest 3-8 retracement to enter on the short side of the market. That will be a much safer situation for interest, much safer way to enter on the market than currently dive in the gambling and trying to just foresee the potential move without any signs on the current intraday charts.